He's the chief market strategist at Miller Tabak. It's good to see you, Matt. Welcome.
Thanks, Kelly.
Let's get right to it. Your first buy is Meta. It's down 40% this year or thereabouts. Why do you think now is a good time to buy?
Well, I just think, one of the things I am a little cautious, of course, with the higher interest rates, and I'm cautious on the tech area overall. And one of the things I want to look at is some of these beaten down stocks that provide really good value. There's also one that's not beaten down, but Meta. I mean, it's funny how interesting how Mark Zuckerberg basically, they had some negative news, and he decided very smartly, in my opinion, let's throw the kitchen sink. Let's just get all the bad news out there. And we can take, or at least maybe not take the target off our back, but maybe shrink a little bit in this election year, and we won't get into some of those regulatory issues. And yet, the stock is now trading with 17 times earnings, so it's gotten a lot cheaper. And they grow revenues. It's on the low side, it'll be 20%, and I'm guessing it's probably more like 30%. So this is one you want to buy like every month between now and election day. And next year, this stock is really going to be a great one, I think.
Even if there's nothing about Meta or Facebook about the story that excites people right now?
Well, I mean, one of the things, of course, is you say the meta and the whole thing with the metaverse and what they're doing to move into that area. It's kind of a long-term thing, and a lot of people, I think, are really poo-pooing it, saying, "Yeah, that's many years down the road, et cetera." But in many ways, they're doing what Amazon did so well in the past, where they've said, "Hey, we don't care about the stock right now. We're going to invest where we really need to invest, where it's really going to make us a lot of money."
Sure.
And of course, the metaverse is that area, and I think that's going to work really well for them.
Yeah, it is amazing. I mean, that stock 45% off the year high now, 208. You say stick with it for the long term here. What about Cisco? This one more of a dividend story, and sometimes I wonder if rising rates make dividends more or less compelling, because maybe their 3% yield looked a lot better, a point on the 10-year ago. You know what I'm saying?
Well, that's true, but I mean, as interest rates go up, interest rates go up, it does make anyone who pays a decent dividend yield a better play. And again, since I'm somewhat cautious on the group overall, and the sector overall, this is, again, it's a stock that's been beaten down. It's down about 20%, certainly not as much as Meta, but down 20%. A good long-term company with a good management team, and again, it trades at 14 times earnings. They have a great $1 billion in cost savings cost savings program they're putting in place, and they still have a $15 billion buyback that was put in place not a short time ago. So with it down this much, I think it's a good play. Again, not the sexiest name in the world, but I think in this environment with all the volatility, it's one you want to look at.
Yeah, the stock price for sexy right now is not something I think people really want to chase, which brings us to Apple, which is not, Apple's still Apple, but this is a name that seems, you think, to be kind of a perennial opportunity. You think it is so here?
Yeah, it's kind of funny. I remember back in 2009, I had in the summer, it was after the bottom, and some retail brokers were asking me, well, if you really get some people excited about the market again, and I said, tell them Apple. Everybody owns Apple. If there's something they can grasp onto and believe in after the whole fiasco of 2008, it was Apple. Well, the same is still true today. I mean, people are saying, well, Tim Cook, he's not an innovator in this. It's like, well, nobody's saying that anymore. And you think about, we need, when volatility is this strong, what do we need? We need a good, solid business. We need good free cash flow. We need strong management team. Check, check, check. I mean, they can generate $100 billion of free cash flow just from the iPhone. So again, in the stock, with 8% earnings growth, 10% earnings growth, and 8% revenue growth, this stock is just one in a volatile time that you have confidence in. And not only that, there's a lot of mutual fund managers who have tens of thousands of holders who want stocks that they can understand, and Apple's one of those names. So it's a good stock.
And it's also 10% off its highs, 26 times forward earnings. So those are the vital stats. All right, finally, the last name here is one that you say, again, we're not trying to say this is a sell or a short or anything like that, but you wouldn't be in a hurry to add this one to the portfolio. Why not? Why not Microsoft, Matt Maley? What's wrong?
Everybody's saying you should add it to your portfolio. But, of course, they're saying the same thing about Apple.
Apple, right.
But your mouth here, Maley. What's going on? And, well, one of the things is that it is great company, great long-term prospects. But the CEO, Mr. Nadella, he sold almost $400 million of his own stock, in the company. And it just reminded me so much of what I saw in 1999 when Goldman Sachs Partners sold to the public, and what Blackstone, the big PE firm, did the same thing in 2007. All those stocks eventually went higher. But people don't, the CEO of a company, and again, he's a great CEO. He's really turned this company around. And he has every right to do what he wants to do with his stock. But the thing is, he's going to get more stock, but he's going to get it at lower prices. The stock's down 80% since he made that sale. I think the rest of us should think about doing the same thing. Don't sell what you have, but the more shares, I think you're going to be able to get it at lower prices.